Alrighty, welcome back to another video, guys. And today on the topic, we're going to be talking about how you can trade the Asian session utilizing ICT concepts. Now, I know many of you might be working, if you have a job or you have some kind of, you have a compromise that you need to focus on, during the day, and you're not able to really trade during those morning hours. There's still going to be opportunities for you in the evening hours during the Asian market, specifically during that 8 to 10 p.m. Asian kill zone. And we're going to break it down for you guys step by step to really give you guys an easy way of going at it and not really complicating it. And also, so you're not on the chart for so long, because, many times, most of you don't want to be on the chart for over 2 hours. So ideally, really, it's looking for something that you're in and out within an hour or less, and something that repeats, of course, which is what we want to utilize. So I have this in order of importance of the pairs that I would personally trade. This is also particular mainly to futures, but of course you can also utilize this for anyone trading overseas and things like that. If you trade forex or anything else, it's the same thing. But for Americans, really it's going to be that utilizing the futures for all these three. The first one is Japanese yen, which I'm actually on the daily chart for. Japanese yen is really, really good. It moves a lot. It's a very volatile currency, especially during those Asian hours. It moves a lot. Not only that, but it's also the Tokyo Stock Exchange Open, because it opens at 8 p.m. Eastern Standard Time for us here in the States. But for them, it's actually 9 a.m. in the morning. So making this currency really, really ideal to be trading those hours. But this is my first choice for anyone, wanting to trade that. Second choice is going to be gold. Gold is also really good. It moves a lot. You do have really good opportunities. It's going to happen, though, during that later macro. I'm going to break it down later in this video. But for gold, it's going to be during those later hour macros. And lastly, you also have the Nikkei Mini. Now, this is the stock index from Japan. This is the main one. It's the most liquid one. If you guys want to trade that for futures, I don't know if they have this for any other type of asset class out there, but for specifically for futures, the Nikkei Mini on the Osaka Stock Exchange, you guys can utilize that. But mainly, like I said, those hours of operation are mainly from that 8:30 to 9:30 session, and then we can also utilize the macro. So going into this here, going right into yen, showing you guys what kind of setups that you'll be able to engage in price. And we're going to go all the way to Monday here. And really, my personal model, my personal setup really dictates that I can only buy if I'm below midnight open, and I can only sell when I'm above midnight open. So really, by utilizing this, I utilize it as a filter. I don't have to focus on waiting on anything else other than, am I above or below that midnight open? That way I'm able to filter out those days quicker. So you're not sitting and waiting for something that is not really coming in your favor. And I also have a video on my model. I'm going to be linking in the description below. And again, you guys can utilize that on really anything. But of course, I want to give a big shout out to ICT, really being the mastermind that obviously these concepts come from. It's just my rendition of it, my perspective, my take on it. Now, looking at the yen, really the only time you're going to be looking to be getting in on trades, like I said before, 8:30 to 9:30. And you might be asking, why do I choose this? Now, I was doing a lot of back testing and studying these sessions specifically, but I realized that, for example, ICT, he says that since the New York equity markets open at 9:30 a.m., during that ICT silver bullet model, we want to wait the first 30 minutes and look to get in at, actually look for entries at 10 a.m. We wait for those first 30 minutes after the equity is open. So I thought I'd apply the same principle for Japanese yen and wait from that time wait till the first 30 minutes, let them pass. And as you can see here, this is 8 p.m. Their stock exchange opens here. We let those first 30 minutes pass, and right here is that 8:30. You can now start to look for setups. And really, like I said before, firstly, are we above or below midnight open? We're extremely below midnight open. As you can see, that's that midnight open. And the second thing is utilizing the 8 p.m. open. I always utilize this for the ICT power of 3. And we're going to drop that right there. We're going to go to 8 p.m. opening price. In my model, I always talk about how I like to see price take liquidity, especially during the session, on the contrary side of the direction that I want them to go towards. And we're seeing that here. And similar to ICT's Caleb model, where he looks for highs or lows that are easy and clean that he wants to see get taken out. Now, if you look at this, right, simple, where is price drawing towards in all this price action that seems really clean and there's going to be buy stops or sell stops, for example? It's going to be here. So you see how these highs are really clean? There's going to be buy stops residing above this high, and as you can see, they're really clean. So you would just simply draw that out, and you're looking for these easy, low-hanging fruit objectives, and this is going to provide you for a really consistent model going into the day. And then from there, it's simply just framing your setup. So obviously in all of this, you're still waiting because price is still respecting bearish PD arrays, fair value gaps, all these different things we see them respecting, and you simply wait. Price then violates bearish PD arrays here. We come back into this fair value gap here, right? And then we trade up higher. So that could be a possible entry there. You could also wait for that market structure shift because price comes up, high, low, higher, high. And then you could also, right here, you can be expecting that higher low right there inside this fair value gap there. And where is price drawing towards? These clean highs up here. And then as we can see here, price then begins to trend lower slowly. But we didn't reach target, but the idea was still there. We're framing our idea based on not only below midnight open, but below the 8 p.m. opening price. And you could also start trailing your stop, and then obviously you'd be stopped out there, but it's still fine overall. And then now we're going to go over to gold to see how you could utilize something similar, but with a different time. Obviously, guys, you want to utilize your daily. You don't want to only utilize that in particular, but pertaining to the model, so you filter out those setups that you don't want. You still want to use that midnight open overall. So for example, if we go here and let's see Monday here. Now, gold is interesting because gold tends to move during that 850 to 910 macro that I spoke about earlier. So ideally, you want to be looking for your setups there. So for example, that macro starts here. Right there on the macro, we see price. We already have explosive movement. We see price respecting bearish PD arrays. And also, what did I say before? We're above midnight open. So you're looking for setups that are forming. You want to have a sell bias going in because you're above that midnight open. And you're also respecting bearish PD arrays. So we're seeing price trend lower, displacing, respecting market structure, order block there, fair value gap there respected. And ICT also talks about as wicks as being gaps, and then we continue trade lower. At the opening of this 9 p.m. hour, we see price trade up, stop on anyone that's still trailing their stops, and then we trend lower. So gold could be a little bit more of like, it's a little more, let's say, savage, just because its moves are a little bit more parabolic, but there are definitely setups that form here. You could even hold it off even longer, depending on if you have any larger time frame PD arrays, if you had a new day opening gap down here, or something similar, for example. And real quick, let's check out Tuesday here. It looks a little cleaner. As you can see here, we're very above minute open. Minute open is all the way down here. This makes it a very ideal setup for us. And that macro, if we draw this out, macro is going to start at 850. You're not looking for anything until that 850 macro. And what did we say before? We're looking for low-hanging fruit. What's your first low-hanging fruit? These equal lows right here. Very clean. They're very clean. I'm actually going to start up here, make it a little cleaner to understand. And if you look at this, already you're saying, okay, so we have equal lows. We barely took them there. It's still clean. And we're targeting that. We're above midnight open. And then you also look for other low-hanging fruit. Where do you have more low-hanging fruit? Right here. These are also clean lows. These sort of equal lows here. I'm actually going to start it from here. There's going to be sell stops residing these lows. So you're looking for that. And you could obviously look to go even further down. We saw that gold actually went down, went below midnight open. It did do it actually the next day, but we still reached back down into discount because price was in a really big premium. But it's looking for these really simple setups, low-hanging fruit, and looking for price simply to give you the hand, show its hand, as ICT always says. And again, macro starts here, and that macro is going to be closing at 910. And what did we say? We're simply looking for a PD array, a point of entry that we could take to take price lower in all this price action. And what do we have here? Price has a fair value gap. Right here, we see price respect that. But again, like I said, you're still framing this idea with larger time frame PD arrays as well. It's not only utilizing this idea. I simply say this so that way you filter out a lot of the information you're seeing and know when you want to be on the charts and when you don't want to be. But a good thing here we have is price was taking buy stops. We see price taking buy stop, buy stop. We displace lower. Price creates these this fair value gap up in here, and we respect that as well. And also, we actually have a breaker because we have, if I clear this out so we can see this a little cleaner, we have a high, low, higher high, lower low. So this is actually a breaker right in here. If you draw that out, the last up close candle. You could also use the last down close candle, but for this example, I'm going to use the last up close candle. We see price trade up into it, giving you more confluence that this is going to hold. But you're also framing that idea with the equal lows here and the equal lows that you have here. So it's targeting those really easy low-hanging fruit. Alrighty, so now we're going to go over to the Nikkei Mini. This is going to be for those of you who want to trade possibly maybe some kind of equity index. They do have it. It's going to be on the Osaka Stock Exchange. You just have to check if you're a broker, if they allow you to trade on international exchanges, futures exchanges. And this is the most liquid one, I believe, as of 2024. Currently, this is going to be that most liquid one. So I'm here on the daily on Nikkei, and it's going to be practically the same premise. If we drop back down to that 1 minute looking for setups, this is going to relate more to what we saw on JPY, since obviously they relate to one another. And it's going to be the same thing. You're going to be looking for setups that happen between that 8:30 to 9:30 session. But of course, you could even look for 8:50 during the macro to 9:10, and you're looking for low-hanging fruit, right? So what did we say before? For example, looking at Monday here, where are potential draws for price? It really relates back to what ICT was talking about with not only the silver bullet model, but Caleb's new model, is where are there easy low-hanging fruit that we could target from that session, and which is going to be where? Right here. All these equal highs up in here, there's going to be equal highs here, there's going to be equal highs here, but I just put it on the top so it's a little easier to understand. And we even see equal highs up here. Now, price action with this index isn't as clean. As you can see, there's a little bit more manipulation in there. But if with due time and a little bit of back testing and practice, this can possibly even be better than any of the other two that I mentioned earlier. And some of you might like this more than the other ones. But again, of course, it takes a lot of practice, discipline, patience, and finding which one of the three is going to best suit you during that time overall. And obviously, another thing to note is we are actually above midnight open. So in this case, this buy wouldn't have applied in our case since we're above. But of course, you can take them. It's near midnight open for those of you who want to take that. But I use that midnight open to filter out days where I'm going to be most probable. And for example, let's say here, maybe we went just below midnight open. We went actually below it 4 or 5 times here, and then we went higher. But like I said, it isn't really the cleanest price action index. It's not as clean as we would see, for example, on Nasdaq or anything like that. Now, you guys might be asking why I didn't include Nasdaq or any of the American indices. During those Asian session hours, these stock indices tend to not really move much. Here's an example right here. We see price sort of chopping around that midnight open. This is yesterday for Tuesday. And we see it's just a really large consolidation all through this whole price action. It finally breaks out late at around 10. But again, it consolidates and chops once more. And ideally, we want to see moves like this where we see a lot of movement compared to all this chop. And even Monday, if we head over to Monday, so you guys can get another example of how price action is on these days. Again, look at this. It isn't really clean. It's choppy. I'd ideally stick, if you want an index, stick to the Nikkei. It's going to be a little bit better, but all this chop here, it's not really good, So you really want to place yourself in a scenario where you're going to be most probable for success. And in all this price action, especially, like I said, it's an Asian session. The American markets are closed, so obviously you're going to start to get some chop during the Asian session. So it's better to stick to that JPY, USD, gold, or even Nikkei if you're really looking for an index going in. So if you guys enjoyed this video, I'm also going to be linking down below in the description my model. And I appreciate you guys' time. Feel free to comment down below if you have any kind of questions. and I'll be sure to comment down below and answer them. Till next time, have a good one, guys. Peace.